Welcome back. It is weekly options expiry today, so just thought I'll put out some trends that we're witnessing in today's trading session so far from the F&O space. And the Nifty is very close to that 17,400 mark. That's where it's been all through today's trading session. And why is that? Well, because if you just take a look at the active options today, we have the 17,400 call, which for 25 rupees has added almost 1.17 crore shares in open interest. And similar is the case for the 17,400 put. The 17,400 put comes up for you. That has a premium for almost 10, 12 odd rupees, rather 40 odd rupees, 46 odd rupees. And that's added almost 74 lakh shares in open interest as well. What does this basically mean? Smart money or straddle writers. Straddle is a call and a put together. What they do is basically they sell a 17,400 call and a 17,400 put. They pocket a premium for around 65 rupees, which is 40 plus around 25 odd rupees. So they eye a range of 17,335 on the Nifty at the lower end to 17,465 on the upper end. Was that strategy to go wrong? Because, you know, they make money only if the Nifty expires closer to that 17,400 mark. So if that strategy goes wrong, they go ahead and buy that 17,500 call and 17,300 put to protect themselves. So in a sense, what happens is that by paying 13 rupees, you hedge yourself and you get almost 65 rupees in the premium that you're paying. So this is what usually happens on weekly options expiry days. Smart money writes a straddle, which is a call and a put together, hoping that the market stays in that range. And if it was to break above or below that range, they buy hedges in forms of puts which are 100 points lower than that range or calls which are 100 points above that range. And why is this important? Because I was just looking at some data over the last few months, few quarters itself. The average options volumes, daily options volumes on the NSE have increased. In fact, it's been 1.33 lakh billion rupees in the second quarter, which is just around 74,000 billion rupees in the same time, third quarter FY22. Last year, this number in September was 69,000, and this has doubled to 1,52,000 in September of 2022. And in the last couple of months itself, it's been almost 30 to 40% higher than what we've seen over the last preceding few months. So basically, options volumes are increasing. A large part of that perhaps is smart money, a large part retail investing as well. And as that happens, we have to keep tracking these options ahead of expiry.
Okay. Right.
To be honest, some of that was Greek and Latin to me, but we're glad you're sitting right here to explain to us. Yeah.
Increasing so much is indicative of the kind of participation that we are seeing
both
across
from
the board.
retail as well as from smart money.
So if that's Greek and Latin, if there's a question that you have, please allow me to answer that primarily because maybe someone else who might not have understood.
Yeah. We'll do an explainer on the F&O space. I think one of these days is well deserved.
All right, we'll do that.
But as of now, we do have our technical check lined up. Aditya Agarwala joins in to discuss a lot of what he's tracking on the technicals of the market. Aditya, hi, thanks very much for taking the time out. Well, it's good momentum and, we seem to have shrugged off any kind of global concerns or volatility that we saw in the US market. So how exactly are you taking this forward?
Hi, thanks for having the show. I was listening to Mangalam. He was just mentioning how option writers use volatility and the expiry date to trade. And he's put it out there, everything, the levels to watch out for and what is the momentum and the trend for the market for the day. Just to add to it, the momentum is going strong. We are continuing from the previous session and on the downside, 17,330 is a key support area, as Mangalam also pointed out, that is the area where a lot of your support comes in. And on the upside, clearly for the day, 17,450 to about 17,500 is where the resistances are. So my sense is for the day, markets could continue to play in this range between 17,300 on the downside to about 330 to about 17,450 to about 17,500 on the upside. Going ahead, maybe tomorrow or next week onwards, 17,500 to 550 is a kind of a hurdle zone in the recent pullback rally. And if that is not taken out, maybe there's a case for a bit of a profit booking in the markets that could drag it down to at least 17,000 to about 17,100. But for the day, as Mangal also pointed out, that 17,450 to 500 is the hurdle. You can go ahead and buy at these levels, maybe look for a profit booking close to about 17,450, 500.
And what about on individual stocks? Aditya, good afternoon. There's plenty of that's buzzing today, right? Whether it's Persistent, you have SpiceJet, JSW Energy. Anything from that space that you like in the broader markets, and what would be the strategy for the rest of the day?
Afternoon, Sonia. So absolutely, there are a lot of spaces which is buzzing around, be it the cement space, the IT space, you name it, the sugar space, everything is buzzing around. So I picked up a couple of buy recommendations as well. The first stock that is stood out is IRCTC. There's a lot of momentum still to catch up. A lot of the cement space has already moved up. So for the day, I would stick to IRCTC, where I see a big momentum building up and maybe a breakout is on cards. So go ahead and buy at current levels, look for a target of 755 on the upside, put a stop loss at 715 on the downside. The second stock recommendation is UBL. This is one stock which has actually bucked the trend and has been on an upward momentum and a journey. I believe it is going to continue doing so. So one can go ahead and buy UBL at current levels, look for a target of 1840 on the upside and a stop loss at 1700 on the downside.
Take that point on UBL, Aditya, because a couple of factors fundamentally working out for them. Navratri is off, so a lot of people, they don't consume alcohol during Navratri.
Yeah.
Now that is over. So up until now, from here to the end of the year, these companies have a clean run as far as consumption is concerned. And UBL over USL in particular, because it's October heat. That's what they talk about, right? Post monsoon,
so a cold beer is what would suit you, right?
That's what, not me.
That's like, making the deduction that Cipla's at a fresh high because they have a good pediatric portfolio and, the economy's opened up and there's just lots more cough and cold around.
Well, cough and cold maybe, but cold beer perhaps.
Cold beer would do, yeah. And
yes.
also a midweek holiday, right? So people have perhaps more chances to celebrate. All right, before we slip into a break, here's some great news for investors. You can now track the US market action real time on Money Control. Just log on to the website or the app and stay informed about all that matters in the global markets.